What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be talking about in this update is we're going to be going over that Ortex short interest and utilization data. We're going to be talking about what the option chain is telling us going into the end of this week, specifically that max pain price that tells us what could the price be that the market makers and selling institutions of these options, what is that price that they want to see AMC get to by the end of this week to make the most amount of options contracts expire worthless. Now, the two main key important things that we need to discuss in this update is the fact that there has been this liquidity and collateral crisis that has been forming and escalating over the last couple of weeks and months, and we are really starting to see it ramp up over this last week. And I really want to go over exactly what is going on with this situation with you guys and how it really applies to us. Now, the second thing is going to be the fact that margin call potential is increasing, and this has to do with the price levels that we are now seeing on AMC and the pressure that we are now putting on these institutions. Now, I know a lot of people really hate the word margin call, but what you really have to think about is what exactly is a margin call and how to satisfy one of those calls. The simplest way to do this is just to put up more collateral, maintain those liquidity standards, that maintenance margin requirement that your brokerage has set out for you, and continue on with your position if you need to have it. But we also know that there is essentially that pyramid of shorts where at the top there are a few institutions with very, very large short positions, and at the bottom there are many institutions with smaller short positions. Those institutions at the bottom are not going to be able to maintain these margin requirements as long as the higher institutions. So those are the institutions that we really need to be focused on when we start to see the next massive leg up. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording, AMC is currently trading just below $43 a share, up about 5.5% on the day. Honestly, great day so far. Now, when we come over to this Ortex update right here, we're seeing the utilization 87.83. Again, not high enough yet to really see that pressure get put on these institutions in terms of the forced share recalls, but we are still seeing the estimated short interest 17.02%, still very, very high. It did decrease a little bit today, but this is not something that we need to be worried about in the slightest. Now, when we come over to Stonko Tracker to really track the options, quick disclaimer, we got to say this in every single video, just how risky options are, and there are pros and cons to trading these options, especially on AMC. If we do see a bunch of these call options run in the money, then yes, we are going to see a lot of buying pressure get pushed into the stock from these selling institutions, the institutions who have sold us these options. But if those options expire worthless, it is entirely possible that you are providing liquidity to the institutions that have these short positions on AMC and allowing them to keep maintaining these maintenance margin requirements on these down short positions. But what we're looking at here is, again, it's only Monday and we are seeing 40,564 contracts in the money and 134,391 contracts out of the money. So again, we are going to see these numbers increase. If we can continue this bullish momentum on AMC going throughout the end of this week, we are going to see a little bit more delta hedging, which could push us up even higher. Now, when we come over and take a look at what the max pain price is going to be for this week, we're still currently seeing this at $39 a share. So that is pretty far off where we are trading at the current time. And it is possible that we get knocked down back to those levels. But again, what we're seeing here is just the market makers trying to get out of their short-term obligations. And if we see the price start to unhinge and get out of the range that the market makers need the price to be in, that's when everything starts to get really interesting. Now, when we think about these different price levels, I want to take a look at the chart on a little bit of a longer time frame. Now, the Webull is starting to not load as much right now, but let's see right here. What we're seeing is that right around here, we saw a bunch of shorts come in this $50 range. They knocked it back down. So there's going to be a bunch of shorts with their cost basis. Maybe they were new shorts. Maybe they were shorts that were adding to their position in this $50 to $60 range. But we recently saw AMC start to run up in this $40 range, upper 40s, crack the 50s, then get knocked right back down. we are now seeing the price start to curl back up into the mid $40 range. So here's what we're looking at here. We have this level with the 50 and this level with the mid to upper 40s, where most likely the shorts were adding significantly to their positions or new positions. Now, think about if you have a long position on a stock. Originally, say you're a swing trader, the position starts to go in your favor, but then it starts to come back. You might get worried. You need to get out of your position, and that could be exactly what we end up seeing very, very soon if we start to see the price start to curl back up, especially if we can crack that $50 mark again. So yes, mid 40s is going to start to put the pressure on these institutions, but until we can really break through those mid 50s, I think the shorts are going to be able to keep maintaining these margin requirements and keep holding these positions and aren't really going to be sweating that much. But I do think that with all the catalysts that we have coming up for AMC, especially its earnings, I think we could see a lot of bullish momentum into the near future. Now, let's get into this liquidity and collateral crisis that we are seeing from a lot of these financial institutions. So when we come over here, this is going to be the Fed reverse repos. We used to talk about these a whole lot, but we have seen a very long streak of these reverse repos being over $1 trillion. And that price point is very, very important. So when we're looking at this number right here, these were the numbers from today. Submitted, accepted, about $1.477 trillion. That is an absolutely crazy amount. And what is happening here is that the banks are giving the Fed cash in return for Treasury securities. Now, why exactly would they do this? Well, when we come over to this old article from MarketWatch, either there is too much cash or not enough collateral at the current time, said Scott Skyrim, Executive Vice President in Fixed Income and Repo at Curvature Securities. So, too much cash in the system. Well, we know the Fed has pumped so much money into the economy, and when the banks are holding that much cash, it then becomes a liability because they do have to pay interest on that. But the collateral part, in my opinion, is the most important piece of all of this. So when we come over here, this is kind of the Investopedia page on reverse repos, but there's this special consideration page right here. Part of the business of repos and reverse repos is growing as third-party collateral management operators are providing services to develop RRPs on behalf of investors and provide quick funding to businesses in need. As quality collateral is sometimes difficult to find, this is the key sentence right here. Businesses are taking advantage of these assets as a quality way to fund expansion and equipment acquisition through the use of tri-party repos, resulting in RRP opportunities from investors. So, what does that sound a lot like? Well, when we come over here, Federal Reserve Board announces the individual capital requirements for all large banks effective on October 1st. Those capital requirements ensure that the large banks will hold roughly $1 trillion in high quality capital, enough to survive a severe recession and still be able to lend to households and businesses. So what it looks like is happening here is that the banks don't actually have this collateral, this $1 trillion, and they are using the Fed reverse repos in order to maintain those regulatory standards. So this is a system that is kind of being propped up by the Fed right now. And when the Fed eventually starts to back off of these reverse repos, we could see stuff start to crumble. So that is mainly going to wrap up this update on AMC. Again, we have had a very, very solid day so far, and let's bring this back to the one-day chart. We are still doing phenomenally well. Now we are bouncing back up 43.24. Again, the price is most likely going to be slightly different by the time you guys see this video and the market closes, but we are having a very solid day. Awesome start to the week, and I think that this is only the beginning. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.